Have you ever felt like the government is secretly taking more money from you than they should? Like, you work hard, you hustle every day, and somehow when tax season rolls around, you owe more than your friend who works a 9 to 5 and plays video games half the day? You're not crazy, you just haven't mastered the tax deduction game yet. But today, that changes. Because in this video, we're diving deep into the insider secrets of tax deductions for freelancers in the USA. This is the stuff nobody teaches you in school, but it can literally save you thousands of dollars a year if you get it right. And no, you don't need to be a tax accountant or have a PhD in IRS lingo. I'm breaking it all down in plain English. Even a 15-year-old could understand it. So grab a notebook. This one's gonna be gold. First, let's talk about why freelancers pay so much in taxes. When you're an employee, your company takes care of half your Social Security and Medicare taxes. But when you're a freelancer or self-employed, you pay both sides. That's a whopping 15.3% just for self-employment tax, on top of your regular income tax. Yikes. But here's the twist. You also get more tax deduction opportunities than a regular employee. Think of it as a perk of being your own boss. You can write off legit business expenses and lower your taxable income. The lower your income on paper, the less you owe in taxes. So the game is simple. Track every deductible expense and legally subtract it from your income. Let's break down exactly what you can deduct. Let's start with the big one, home office deduction. If you work from home, even a tiny corner of your room, you may qualify to deduct part of your rent, mortgage, utilities, internet, and even cleaning supply. Now, the IRS rules say your home office must be exclusively used for business and regularly used as your main place of business. So no, working from your couch while watching Netflix doesn't count. But if you've got a desk set up that's only for work, even if it's in your bedroom, you're good. There are two methods. The simplified method lets you deduct $5 per square foot up to 300 square feet, so max $1,500. The actual expense method lets you deduct a portion of your home expenses based on your home office's percentage of the total square footage. Over 26 million Americans work from home either full-time or part-time. That's a whole lot of potential deduction. Next up, anything you buy for work can be deductible. That includes laptops, monitors, printers, webcams, external hard drives, phone and accessories. Even software like Adobe Premiere, Final Cut, Canva Pro, or Microsoft Office can be deducted. Let's say you buy a $1,200 laptop just for freelancing. You can either deduct the full cost using Section 179 or depreciate it over a few years. Even better, if you use your phone for both work and personal use, you can deduct a percentage of your phone bill. Same goes for your internet. Keep a log of your work usage and apply that percentage to your expenses. Pro tip, keep digital receipts in a Google Drive folder. Use a tool like Expensify or QuickBooks Self-Employed to track automatic. Did you take an online course to learn editing, design, coding, or even how to grow on YouTube? Guess what? That's deductible too. Any course, workshop, webinar, ebook, or subscription that helps you improve your freelancing skills is a valid business expense. That includes Udemy or Skillshare subscription, coaching sessions, ebooks on business or marketing conference tickets, certification fees. As long as it's related to your freelance work, it counts. According to the IRS, even a motivational seminar can be deductible if it helps you grow your business mindset. Yes, you can deduct travel, but only if it's business related. If you flew to another state to meet a client, film content, or attend a networking event, the following can be deducted: flights, hotels, Uber, Lyft, 50% of your business meals, rental cars, and gas parking and toll. But here's the key. Keep documentation. Save all your travel receipts and keep notes about why each trip was business related. You can even use apps like MileIQ to automatically track your mileage when driving to a client meeting or co-working space. Even grabbing coffee with a potential client can be partially deductible. You can write off 50% of the cost under business meal. Every dollar you spend on growing your freelance brand, deductible. This includes running Facebook or Instagram ads, hiring someone to design your website, paying for a domain and hosting subscriptions to tools like Zoom, Calendly, or Notion business cards or flyers, paid promotions on Fiverr or Upwork. Let's say you spend $500 on Instagram ads to promote your service. That $500 can be deducted from your income, lowering your tax bill. Even better, platforms like Patreon, YouTube Premium, if used for education or research, and Canva Pro qualify if they support your freelance work. Here's a big one that many freelancers miss: self-employed health insurance deduction. If you pay for your own health insurance, you may be able to deduct 100% of your premium. That includes dental and vision too. You can also save on taxes by contributing to a retirement account like SEP, IRA, Solo 401k traditional IRA. These contributions lower your taxable income and help you save for the future. For example, you can contribute up to $66,000 in a Solo 401k if you earn enough. Imagine how much that reduces your tax bill. Only about 1 in 4 freelancers actually contribute to retirement, so if you start now, you're ahead of the game. If you hire an accountant to file your taxes or a lawyer to draft contracts, that's all deductible. Even hiring a virtual assistant, editor, designer, or copywriter can be considered a business bent. If they help you grow your freelance business, it's a write-off. Bonus. If you use platforms like Fiverr or Upwork to hire other freelancers, those payments count too. Always ask for an invoice or receipt and record the purpose of each service. Do you use PayPal, Stripe, or Square to get paid? Those annoying little 2.9% fees they charge for every transaction? Yep, also deductible. Same with monthly fees for business bank accounts, check ordering, or accounting software. Even interest on a business credit card might be partially deducted. The goal is to reduce your tax bill with every penny you spend to keep your business running. Here's where most freelancers lose money. They don't track their deductions properly. You need to keep detailed record, especially in case of an audit. Use tools like QuickBooks, Self-Employed, FreshBooks, Wave Accounting, Google Sheets for manual tracking. Save digital copies of receipts, categorize your expenses, and note the purpose of each transaction. Doing this will make tax season so much easier and can protect you if the IRS ever comes knocking. The IRS typically audits only 1% of self-employed people, but if you claim a lot of deductions without proof, your chances go way up. Freelancing gives you freedom, but with great freedom comes, well, great paperwork. But here's the deal. If you understand the system and keep smart record, you can legally reduce your taxes and keep more of what you earn. It's like unlocking a cheat code for freelancers. So now that you know the game, play it wise. Claim your deduction, track everything, use the tool, and don't let Uncle Sam take more than he should. If you found this video helpful, hit that like button, subscribe for more finance hacks, and drop a comment below telling me which deduction surprised you the most. This is your money. Let's protect it together.